Hello and welcome to the Cryptocurrency News channel. This is the TA, FA, and chart analysis for January 7th, 2002. And there's a couple of patterns I want to look at. Yes, things are bearish, we're dumping, but it may not be as bad as people expect. I do think the dump was a reaction to the Fed announcing that they're going to raise interest rates. But since people know that, we might have a reaction to the announcement, a counter reaction to the announcement soon, and we actually might go up a little bit. If certain things happen, as you can see on the 1 day, we are down. We are down regardless of which way you look at it, whether it's from here to here, from here to here, or from here to here on the upper. And on the lower, we're down as well from this drop to this drop. But as you can see here, we are kind of coiling right now, and it's starting to even out around a central line. The oscillations have become smaller, but that pattern was present yesterday too until we dropped again. So my guess is if we can have 1 or 2 days where it doesn't drop, we'll actually bottom out, trough out, and we will actually swing up backwards again towards the positive, maybe towards 45,000 or so. We could keep on dumping, and many people have been suggesting 38 or 39,000. I personally think it's more around 40,000 because the 10,000s are always levels for resistances and support that are actually harder to break. But basically, we're evening around. Evening around $41,800. And as you can see, we're basically just crawling around the line and oscillating around it. So that could be the break point where we go up or go down again. Now, if we are going to dump, it is probably going to happen sometime late today, maybe close to when the Asian market opens, maybe in 3 or 4 hours. If that does not happen and we stay the course for the weekend, I do expect us to go back up in 2 or 3 days. Now it is Friday, so you could make an argument that the Asian market won't dump too much because it's the weekend coming up and not many people are online. But in that case, I would wait until Monday to see if the Asian market or the American market dumps or not. If we can hold steady for a few days, I do believe that is a reversal for the short term, and we could see an uptrend going into mid-January. If you actually look at the 5-day chart here, obviously it's down, but there is one thing we need to look at here. There are essentially two dumps, big dumps. One here around January 5th and one here around January 7th, about 2 days apart. But if you will notice something, that the dump on January 5th was a lot harder than the dump yesterday. Once again, I've mentioned this on the stream yesterday. The dump yesterday was roughly maybe 2,000 points, whereas the dump on the 5th was roughly twice as much. So the reaction yesterday was not as hard as the reaction on the 5th. Of course, the 5th is when the Fed actually came out with the inflation numbers and said they were actually going to raise the interest rates. So we had a primary reaction, and then we had another secondary reaction that might have been caused by some other factors, maybe the energy crisis, maybe this, maybe that. I'm not really sure what it actually is caused by, but right now you can see the reactions getting smaller. So if we have another dump, it could be even smaller than this one, and that would take us maybe to around 40,000. Of course, we could not have another dump because if you look at the volume that precipitated in this big dump, it's way higher than the volume that precipitated in this dump. And after this dump, there was actually a solid green candle here that actually went up to around almost 43, which almost covered the entire dump. And then it kind of started to go down again, and until it evened out around this line, around 41,800. Whereas with this dump, there was no bounce green candle up. So I could say for this particular dump, there was some upward momentum, whereas for this dump, there was no upward momentum. You could kind of say that if you just look at the 1 day, you could kind of say that just taking this out, this could sort of be a head and shoulders pattern, although head I don't think is actually high enough for me to consider a head and shoulders pattern. You see the head here, the shoulder here, and the shoulder here, and the green line here would actually be the neckline. And we're actually hanging around the neckline, although I will say for a lot of it, we are significantly below the neckline. So we might have a chance for an even smaller dump of maybe 1 to 1,500 points and then trough out after that around 40,000. So that's kind of on the 5-day and the 1-day. On the 1 month graph, we are definitely negative, and we've become even more negative since December 27th, a few days before the new year. That is the major negative trend right here, going that way. And of course, that's because of the 2 dumps we've actually had. Now, we're going to have to see if we actually even out. And I think like looking at the trend and the forecast, I think looking at the 1 day and the 5 day, especially the 5-day on TradingView will actually be better than looking at the 1 month right now, because obviously the 1 month is way down because of the recent few days of dump. If you look at the 3 month right here, we're still obviously down. And the biggest dump on the 3 month, though, was actually at the beginning of December. So once again, you can kind of see that if you look at the 3 month, the dumps have been getting smaller and smaller as time goes on. But but this dump, we basically bounced back up. But even counting the area we bounced back up at, we dumped from 57,000 to 47,000, a dump of roughly $10,000 over the course of basically 1 day. Whereas, these two put together were maybe like $9,000, and that was over the course of many days. So the momentum downward wasn't quite as strong as what it was here on December 4th. And so because of that, I do think like the dumping periods are evening out. They should crisscross around 40,000, and that would be the major resistance. Remember, I also come up with a number in the lower 40s or 40,000, and that's mainly because if you remember, we dumped from about 63,000 to maybe about 28,000 in the summer. We went up to 69,000 this time around in November, and plus there isn't the Chinese kicking of the hash rate miners, so it shouldn't dump quite as much. So I think 40, 41, 42 should be a pretty good bottom point, although some people will say 38 or 39, which isn't all that much different. I still think 40 has a pretty good chance of holding, though. If you look at the 6 month, like I said, we are still positive. Oops. If we look at the 6 month, we are still very much positive. Sorry, that line's bad. 6 month, we are still very much positive to here, bottom to bottom, and top to top here. So that's still very good from bottom to bottom and top to top. Now, looking at the technicals, there's not much to say on the technicals. On the 1 day, I would say the oscillators are actually saying buy, because since the average directional index is not that strong at 34, it's a little stronger than usual at 34 for the daily, but the commodity channel index at over -100 and the stochastic at under 20 are both buy, and the RSI is getting to that buy territory where it's actually oversold. So right now, I think like the reaction to the Fed announcement has actually made it oversold. So the oscillators are saying buy. However, the EMAs and the SMAs are screaming strong sell. Now the EMAs and the SMAs obviously are all going to be negative because we've dumped so much in the last 2 days. However, especially on the 10 EMA, we're going to start evening out soon, and we're going to start reaching that point where we're pretty much equal to the EMA, especially within the next 3 or 4 days, if and only if we stop dumping. So that's why, like, if we have a few days of lull, it's so important, because the moving averages on the 10 especially will actually swing back to neutral or swing back to even buy if we go up a little bit, because the EMA on the 10 is especially attuned towards the last 3 or 4 days. Right now, the last 3 or 4 days are major dump, but once we get a couple of days of basically troughing out, it won't be like that anymore. On the 1 week graph, we have mainly sells. The commodity channel index is still oversold, but the rest of them are kind of like neutral now. And the exponential and the simple moving average on the weekly is going to take a lot longer to adjust unless we get like a $10,000 rise. But I think the daily is going to be more helpful for that short-term trend that everyone is actually looking for. Whereas the EMA for the weekly, it would have to be a week or two of constantly higher prices to actually shift. So what the EMA on the weekly is telling you is to not buy for the rest of January, essentially. I don't necessarily agree with that, especially because I think the daily is a stronger tell right now because we've dumped so much in the last few days. And if we even out, we could go back up much faster than, 3 or 4 weeks. So that is what I have on the daily. But if you're looking at the moving signals all the way down to the 50, which is more than I actually want to look at it, it is actually saying sell. On the monthly, nothing really changes on the monthly unless we have a multi-year bear market. We would have to dump probably below 35,000 for me to turn, for this to actually turn negative on the 20, and maybe even further for this to turn negative on the 30. All the oscillators are pretty much the exact same here. Pretty much they're neutral, but the exponential moving averages on the 10-month, which is the main one I look at, is actually saying sell right now. However, like I said, if we actually move back up above 45, 46, this will actually change to buy. Basically, the monthly is saying what it always says. If you're buying for 3, 4, 5, 6 months or above, still probably a good buy. If you're buying for this month alone, probably not a good buy idea. But like I said, right now I would be focusing more on the 1 week chart more than anything else, and seeing that if we can have a couple of days in a row within the next week where we actually just bottom out and don't go down or slightly go up. If you see that, that might be a reversal of the trend, because we were getting kind of like a head and shoulders with a neckline, like I was actually showing on the 1 day chart. Yeah, you have the head and shoulders formation on the neckline right here. And, the thing is, if we actually start breaking up, that could be the reversal of the trend. So there is more advanced technical analysis using differential equations and asset flow management, but that is very, very complex. I actually didn't take differential equations in college. It's advanced calculus. I stopped 1 year before that. And honestly, I don't really know if asset flow differential equations even apply to crypto anyways, but that is something they would actually use in the stock market for really deep analysis of how these works. I've never actually seen any crypto TA or do it. I don't, Benjamin Cowan might do it on his channel in his premium section. That's not really something I'm going into because I don't really think it applies to crypto at all. But that's kind of the analysis right now for the next few days at least. If you're interested in differential equations and asset flow analysis, you need to buy a couple of calculus books, learn that yourself, and figure out what the economics is all about. But just to give you an idea if you want to go deeper yourself. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button, and I will see you guys later.